Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education, and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Alright guys, welcome back. This is going to be my Elliot Wave forecast for pound yen, pound dollar and gold. But first of all, any views or opinions or suggestions that I express in this video do not constitute to trading or financial advice. So let's get started here on pound yen, which I add my annotations in. Here we are. So we have essentially we've completed a sort of fifth wave here, and for where I see the market sort of heading is within this sort of 1, 2, 3, 4, 5 decline. We have a wave 1 here, a wave 2, a wave 3, and we are currently in this sort of wave 4 um, area right here, and this is where a lot of the sort of traders get trapped in. At the end of the day, this is moving sideways, as you can see. It's moving like that, and you don't want to wait until this finishes until it gives us a bit more clearer sort of a sort of clear direction of where the market wants to go. um, so what we have here is simply a 1, 2, 3, 4, 5 into an A, then a B and another C. That gives us our W. We then have an A, B, C into an expanded flat, and that essentially gives us our X. And what I'm seeing now is we're expecting this to be a sort of 1, 2, 3, and then come back down in 3 waves, and then go back up again in 3 waves, and that will give us a nice W, X, Y sort of corrective structure, taking out these highs, like I said, I mentioned in my previous video. Um, I would suggest, not necessarily trading this move. At the end of the day, I mean, it is, remember, it is going against the overall trend, which is sort of to the downside. So you want to be very, very careful, and we want to look for this. We want to just look for those sells. Those sells are kind of the sort of go-to moves to be going through. At the end of the day, the trend is to the downside, and we want to be following the trend. But at the end of the day, we are in this sort of wave 4 degree, and we will once this wave 4 degree, we will expect some more downside coming in, giving us our fifth and final leg. So that's pound yen. Let's go into pound dollar. So let me add my annotations here. We have a 1, 2, 3, 4, 3, and we are currently in this sort of fourth wave right here, and where we are currently is in this sort of C wave to give us our sort of fourth leg to the downside, taking out these lows possibly, and that will give us our fourth leg completion, and then we will expect the market to sort of push up higher one more time to give us our fifth leg, and then start this sort of correction to the downside. And then if we do see some sort of significant rejection, 50 to 61.8% rejection of this entire wave, we'll then look to see after price action confirmation if we can take an entry. Once we see sort of like 5 waves starting to develop, and we see sort of break of market structure like X, Y, and Z. So I would suggest for the bias of this week, we will probably head towards the downside, and then from here we should get one more up to give us our fifth and final leg. At the end of the day, this is still a fourth wave, and you don't want to be trading it. But in terms of how it's moving, we have a simple 1, 2, 3 right here. And then we simply have a 1, 2, and another 3, so an A, B, C, or you call it a W, X, Y. For me, I consider this a W, X, Y, and then another A, B, and a C, which gives us our A, B, and then we have a wave 1 here, a wave 2, then a 1, 2, 3, 4, 5, so that's a wave 1, a wave 2, this is the wave 3, and this is currently the sort of fourth wave within this impulsive move, and what we're seeing now is the sort of decline to come in, taking out these sort of these lows. Now there is a possibility that this wave right here, as this is the fourth wave, we could possibly get this sort of to be a 1 2 3 and then another 1 2 3, and then we can continue up for another 1 2 3. This could sort of go into a triangle, or it could actually give us an sorry, not ABC, a WXY corrective structure, and we would potentially even sort of make sort of another high again, so long as essentially this level right here, this wave one right here, is not invalidated and the market does not come towards this level, then for me that's basically the sort of area that I don't want to look for the market to basically touch. If this market is invalidated, then this is not considered as a 1 2 3 4 and a 5. It could be considered as a 1 2 3 followed by another 1 2 3, and then we're getting a sort of 5 waves down or 3 waves down again to give us a 3 3 3 corrective structure, and that will basically give us a nice ABC, and to eventually give us our full faith completion. So at the end of the day, this is pound dollar. We could potentially be hitting, not hitting, sorry, continue going towards the downside, and essentially just basically push down to take out these extremes, or these lows. But at the same time, remember we are in this sort of fourth wave, in this sort of impulsive move. So this fourth wave can do anything. You can go into a triangle, you can come down here, then go back up again, giving us an expanded flat or running flat as an A, B, and a C. So at the end of the day, just wait and let this sort of clear up a bit. And if we do get some sort of rejection coming back in here to bring this market back up, then obviously it will be considered as a different pattern. But in the meantime, the way I'm looking at it in terms of even on a lower time frame, like on the hourly time frame, we do have a nice 1 2 3 4 and a 5, and then we have a nice A, B, and a C, or this could be considered as an A, B, C, maybe something like this right here. And where we are currently is in this sort of, so 1 2, we're in this sort of third leg down, and it has still been moving impulsively to the downside. We have also broken a trend line right here. Here's the trend line break. We had the retest, obviously, and then we had this sort of strong bearish candle then to come back and retest again. We had some sort of nice rejection followed by a nice bearish candle, which basically gave us the sort of thumbs up to say that this market wants to continue pushing down. So I'm just going to assume that this is the sort of wave one and this is the wave two, and we are starting to develop into this sort of wave three. You might come back down here, then go back up again a little bit, then just shoot down again, 3 4 5, and then that will be wave three. And then obviously we're gonna get that sort of bigger wave 4 again, and then a wave 5 to give us our full wave completion of this bigger structure that you see here. And then from there, if we do get a nice rejection from this level and we start to see the market go up again, and that will be sort of a nice entry to get in. The full wave, obviously we said before that is so long as it doesn't invalidate the the extremes of wave one, which is right here. If the market doesn't sort of come towards this level and take it out, then I'm going to assume that this is going to be a wave 4 completion, so long as you get some sort of significant rejection and some good price action to say that this market will be continue going to the upside to give us our fifth and final leg. So that's pound dollar. Let's move on to the next one, which is gold. Add my annotations in. Here we go. And obviously I've said it, I said that this was my initial count, and we've sort of starting to see the sort of decline that I said. So we have a wave 1 here, wave 2, wave 3, wave 4, and then a wave 5 into a wave 1 in a higher degree, and now we're currently in this sort of correction or this sort of impulsive move to the downside, possibly to give us our wave 2. When I look at the count in terms of the 4-hour time frame, the hourly time frame, this is what I'm getting. So we have a wave 1 here, a wave 2, a wave 3. Is this the wave 4? And then this is the wave 5. Are we then going to see a sort of 3-wave corrective structure coming back in to then bring us back to the downside? So long as maybe 50 to 61% of this level gets rejected nicely and price action confirmation. And then obviously if this is the case and this gives us a 1 2 3 4 5 and then an A, B, and a C, or a WXY, and then we get 5 waves down, this would then give us an A, a B, and then a C in the sort of higher degree, and then that would essentially give us a zigzag corrective structure to then complete our wave 2. And then once this wave 2 completes, are we going to see some sort of price action that comes in to bring this market back up to start giving us that third and long leg of this entire sort of impulsive move as it's broken market structure to the upside? At the same time, although this I have considered this to be an ABC, if it does become an ABC, this could also be considered as a wave 1, and this could also become a wave 2, and we could be actually on the decline towards the downside. We could actually be seeing, some moves where maybe this could actually be extended. This could be an extended correction, and we could be in this sort of wave 4 for a bit more for a bit more longer than normal. But I'm optimistic as always, and I'm assuming I like to take it one wave at a time. We do have a nice 1, 2, 3, 4, 5 impulsive structure, and it has been extremely bullish. And so just waiting to see how this sort of correction sort of pans out. We do have a breaking market structure right here, and so once the market structure has been broken, there's usually a sort of retest that comes in a bit more deeper to test out previous supply levels, and we can basically see from there, from 50-60%, how that sort of plays out. But yeah, man, that's my sort of analysis for both for all three of these asset classes. I hope you guys do liked it. Please do like, comment, share, and subscribe. I do have a Patreon. The link will be in the description down below, for those people that are interested in mentorship. And yeah, I'll see you guys on to the next one. Take care.